Hello traders at CMC Markets. Welcome to a fresh update by RRG Research for Monday the 3rd of April. And I am recording this on Friday morning the 31st of March. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. Let's kick off with a look at the rotation of the various stock markets around the world with using the MSCI World as the benchmark. And what you can see is that there's actually the rotation that we've seen going on continues with strength for the Nasdaq and the S&P 500. So the US markets are really picking up the pace again. They obviously make up a lot of that benchmark. They're, US markets probably half, maybe a little less than the MSCI World, so that's a very important component. And the other market that is picking up nicely is the Japanese Nikkei index, although it's still pretty low on the JDK-RS ratio axis, it's still moving in a nice direction. And that comes at the cost of the European market. So you see the stocks moving into weakening, you see the DAX and the CAC, and then here's the Hang Seng, which could be a nice trade-off between the Nikkei and the Hang Seng if you want to do some Asian plays. The major move, I think, right now is favoring the US over Europe. It's pretty aggressive because in essence, the French and German markets are still at very high RS ratio levels, so technically they're ahead of the US markets, but they are moving in the opposite direction, and that's what I'm looking for. I'm trying to look for markets that are turning around because they have already made their move. If we do the same on the daily chart, you can see a slightly different picture. You can see how the Nasdaq and the S&P are going through a little bit of a correction after that strong move, and you can see how the Hang Seng is actually picking up here. So this kind of counter trend moves going on the dailies, and I think that gives actually opportunities because obviously those weekly trends are the ones that are major. There are guidance. And the shorter term trends, they need to fit into that longer term picture. Right now, they're contradicting each other. So what I do is I try to look for buying opportunities or opportunities to get into markets that are coming down on the daily. Because then after they pick up again, the daily and the weekly tails are going to move in sync. And you got support from both time frames. If we have a quick look at the RRG that looks at those markets versus a 0% return, that makes it an absolute trend metric, so not relative anymore. It's now looking at the outright trends. And then you can see how, this is a daily chart by the way, you can see how all these markets across the world are now picking up again. So it looks as if equity markets around the world have kind of shrugged off their corrective mode, and we're now getting back into more positive trends, and as you can see, all these tails are moving to the top right hand corner, which is the positive area. That's what we actually want to see, and you can see how the S&P and especially the Nasdaq are leading the dance here. Now let's have a quick look at the individual charts. So you can see here the Nasdaq index is a Nasdaq 100, and last night, it actually peaked above its resistance for the first time. So that's a pretty important milestone, I'd say. It's a daily chart, so that's pretty good, but it's a minor break. If we can continue that today, which is Friday, by the way, so by the time you see this, it's Monday, and you will know whether the Nasdaq has been able to hold this breakout level. If it can, then we're certainly on the way for more upside potential. First level to look at, I think, is around 13,700 for the Nasdaq 100. On the downside, it should be well protected at the breakout level here around 12, let's say 12,900, and slightly lower here at 12.5. If we look at the S&P 500, we got a slightly different picture because the S&P came off much more, but it's now also breaking above its previous high, which is a nice move, and we're actually setting up for a new series of higher highs and higher lows, which should be able to bring the S&P to, let's say, 4,200, 4,180, 4,200. So all in all, a pretty strong outlook for the US markets. Now in Europe, these markets are certainly not bad or weak. They're just like when you start putting them together on an RRG with the MSCI World as the benchmark, they're just a touch weaker than the US. But the chart itself is no problem. As you can see here, it looks as if the stocks index is actually starting a new series of higher highs and higher lows. I think we will see slight resistance coming off these former highs and these lows here. That's around 450. That's pretty much where we closed yesterday. So today will be interesting to see if we can penetrate higher. And then the real proof of the pudding for the stocks will be when it takes out 465. The DAX index kind of similar, nice gap upwards yesterday, and now on the way to the highs here around 15,680, say 15,700, that roughly that area. And if we can take that out, then the next level to watch for the DAX is around 16,300. So that's a nice tradable move, I would say. More importantly is that the overall move for European and US stock markets is that they have seemed to actually shrugged off that weakness that we saw over the last couple of weeks, and they're on the way back up. By the way, now that I'm looking at this, you can see how nicely that dip here ended in the area where the previous peaks were formed. And as you know, this old resistance level turns into support after it. And it certainly worked like that for the DAX index. Let's take a look at the rotation of these FANG stocks, because everybody seems to like them and they're obviously highly traded, so they're very well suited for shorter term traders. So here's the weekly rotation for the FANG stocks, and you can see the strength for the semiconductors, NVIDIA and AMD. You see how Meta is doing really well, and you can see the weakness for Netflix on that weekly chart, and the strength for Tesla, although it is still way to the left. So this is, for the time being, I'm still considering this as a rally within a relative downtrend. The shorter term picture is different here, and if we're looking for short-term opportunities, I think we may see some nice possibilities here. And if you want to approach it really aggressively, then I think that and you do need, because bear in mind the trends for all these stocks is actually pretty good. So they're not like setting up for an outright short trade per se. But when you pair them against another one, you can benefit from the difference in strength. So if you would do, for example, a pair trade, a very aggressive pair trade between Netflix and maybe Meta or Google, because Netflix is moving into that top right-hand corner and Google is rolling over and moving the other way, you could try to capture the short-term difference between the two. It doesn't mean that Google will definitely go down in price. The only thing what you need is for Netflix to rise more rapidly than Google. So even if Google goes up a little, if Google goes up 2% and Netflix goes up 5%, obviously you capture 3%. And that's what you're looking at when you look at pair trades. So that's how you can use an RRG to find those trading ideas. But again, the individual stock charts are, we're going to look at them in a minute, but they're not necessarily all that bad. So near term, strength for Netflix, Tesla, weakness for Microsoft, Google, Meta, AMD, I would be careful with, because that is a super strong stock. It's a super strong uptrend, and it's the highest reading on the RS ratio scale. So this is very likely just a little hiccup in a very strong uptrend. And you can see how NVIDIA is actually already curling back up. So NVIDIA obviously is the one that had that very big move, and you can see how it rolls over inside leading and then goes through a little bit of a pause and then curls back up. And that's what you see with NVIDIA right now. The index itself, the New York FANG, is interesting to look at because I think I talked to you about it like 2 weeks ago on that really big potential bottom that we're forming, and we're still in that process of forming that low, forming that bottom, and we're right on the verge of taking that out. So today, Friday, the 31st, is going to be an important day. If we are able to establish a closing price today, which is sort of significantly above 6,030 in the FANG index, the New York FANG Plus index, I think that'll be a very significant signal because we're kind of ending this bottom formation. You see how it came down during 2022, and then at the start here, we started building that bottom, nice double bottom here. Old resistance turns into support, and now we're kind of challenging that neckline here. If that works, if we're going to take that out at a significant level, these stocks are in for a nice treat, I think. So let's look at a few of those individuals. So here's Netflix. We're looking at near term, so this is all daily, and you can see how, so we're actually connecting it basically to this chart here, to this RRG. So Netflix, you can see how that is improving and moving in the right direction. And you can see that here, this is the RS momentum line, that's above 100, that's putting Netflix inside the improving quadrant, while the red RS ratio line is still below but moving up. That's causing that positive RRG heading. And if you look at the chart here, you can see that we're actually now taking out that previous high, and I wouldn't be surprised if we work our way higher to that 370, 375 peak that we saw, when was that? Here in February. Tesla, obviously, you know, we've all known that long-term toppish pattern, and we're now pushing against that long-term resistance. Near term, it's looking better, but I hope you agree with me that Netflix is actually better than Tesla at the moment. You can see how Netflix has actually managed to curl back up, and Tesla is still struggling. So out of these two, I think Netflix has my preference for that reason. It's still pushing against that overhead resistance. There is that little downsloping trend line coming down. So Tesla will have more resistance to overcome before it becomes really interesting and new upside potential will be unlocked. If we look at Meta, then you can see how Meta is actually still doing really good on a relative basis, but is losing a bit of momentum. As I said, these charts are not necessarily all bad, because you can see here how Meta is actually holding up very well after breaking above that enormous rally. After that gap, we sort of corrected. We never managed to completely close the gap, which is a good thing, because that means that the buyers weren't willing to wait for the price to drop back to that gap level, and they stepped back in here. They were happy to take out that resistance level, and we're now pushing against 208. 208, 209 is probably that resistance, that all-time, that high here that we need to take out in Meta. If you look at it on a relative basis, there's just a few other stocks in that FANG index that have more strength ahead of it, but Meta itself is definitely not bad. And if we go to Google, then Google is a different cookie. Google never managed to take out that high. So we have that rally here, but you can see how it's running into trouble. And if we go back to that RRG, you can see how Google is inside leading, but rolling over and about to cross over into that weakening quadrant. Making it probably one of the weaker stocks inside the FANG index in terms of short-term potential. Because you can see how that resistance here around 108 actually managed to cap that rally in Google, and it seems to be on the way back down here. So of all these FANG stocks and the ones that we discussed, I think that Google has the most opportunity to at least underperform on a relative basis. But from this chart here, I wouldn't be surprised if we would see some prices actually going lower, so in price terms as well. And the most upside potential is probably for Netflix, and you can see how that is actually curling back up as well. And if we bring that back to the RRG, then we would be looking at a pair between Netflix and Google, which kind of makes sense from a visual point of view. And also when I look at the individual charts, you can see how Netflix is actually working its way higher and Google is actually just peaked and working its way lower right now. I am going to leave it at this for now. I hope you enjoyed the show, and we're looking forward to seeing you back at a new update by RRG Research next week. Same time, same place.